Okay, I'm good to go.
Alrighty, it looks like we are live. I guess we can let everyone in that's waiting. Trickle in. Sure. Alrighty, it is 2. Let's get rolling. Okay, thank you everybody for signing up, for carving out some time on your Wednesday. Just mute a couple. Yeah, so thanks for coming out and taking part in our first time homebuyer webinar. So my name is Sam Thompson. I am a local mortgage agent working for Joe Bladdock in the area, Barrie, Aurelia area, and we're joined today by Caleb Streeter, who will be covering the real estate side. So I'll primarily be focusing on mortgages, what to expect, all the boring but important facts and figures, and then Caleb looks after the fun side of getting your actual home, finding some properties. Yeah, so you can see in the chat, I'll start first, then Caleb. There's also a time set aside for questions and answers. So it'll be around 3. Whenever Caleb finishes up, then we'll open up to some questions and answers. So at any time when I am presenting or Caleb is, if you guys have any questions, please hold on to them. Just type them into the chat, and then we'll come around to them at the end. Or at the end, you can always unmute yourself, and we can go from there. So without further ado, I will share my screen and we can get rocking. Okay. Oops. All right. I did it again. Okay. So you guys can see that okay? It looks good. Okay, perfect. So welcome guys to the first time home buying webinar. So as I was saying, I will be covering what the mortgage process looks like using a broker, some different types of mortgages that are available to you, some mortgage mistakes that we see a lot of people come into the office with. A lot of them don't even really know that they've made. How to find a down payment. We'll cover, how to get some grants, incentives, cash back when you're applying. And then of course, I'll wrap up on what the first time home buyer incentive is. So just a little bit about myself. So as I was saying, I am a mortgage agent with Verco Mega Mortgages. I work for Joe Bladdock, who's probably the Facebook page that you signed up for this with. We are licensed with all banks and lenders. And my role specifically in the office is dealing with first-time home buyers, taking them through the process. So if you take it the next step with us, you'll probably have a phone appointment scheduled with myself, and we'll chat about getting you your mortgage. So before I begin, I'm just going to go over a case study. So this was a couple that came to our seminar maybe a year or so ago. So just keep in mind the facts and figures of, this couple, and if it seems familiar, seems to relate, then just keep in mind all that kind of stuff. So they came to our seminar. They only had $1,400 in their bank account. They didn't know what their credit score, and they made approximately $65,000. So not a total abnormal couple. We see that quite often. So what happens? So just months after they moved into their first home, their mortgage payments were just under $500 biweekly. So really what I want this case study to just be a testimonial of is just that the process works, regardless of where you are. We can take you from a brand new homeowner to, somebody who they already have tons of savings, any of that kind of stuff, working with myself. And then when we pass you over to Caleb, it works, and we can get you hopefully into your first official house. So where do you start in the whole process? So the biggest thing we can advocate is for you to get pre-approved. It is a super simple process. It avoids disappointment, speeds the process, and could save you thousands. So we actually give you, through that pre-approval, an accurate number of what you would qualify for on your mortgage amount, like your maximum value. So for disappointment side, nothing would be worse than, chatting with Caleb, looking at some beautiful homes that are worth, $500,000, only to find out that you only qualify for $450,000, and you now have to compromise on things you've already seen. Once you get pre-approved, we can give you a accurate price point to approach Caleb with, and you guys can start shopping right away in houses that you already know that you'll qualify for with a mortgage. So through that, it helps you know what to expect once your mortgage actually gets processed. It also does present a stronger offer, and the seller will take you more seriously. So what having a pre-approval certificate does is it really communicates to the seller that, I've done my homework, I'm already linked up with a mortgage agent or broker. I already have been, pre-qualified for a set amount. So it really presents a strong offer that you've already started the process. And in this day and age and this time when we're seeing rates as low as they are, one of the greatest perks of getting pre-approved is it actually guarantees your interest rate for 90 to 120 days. So as we're seeing them, at record lows, it's a really good way to lock them in. If we see them rise, anything like that, your rate will be secured. So these are just some of the banks and lenders that we work with. Some of them you may recognize as, your own personal bank. Some of them you may not. Really, this is just to show that there is lots of banks and mortgage options available when you work with a broker. We really pride ourselves in being able to find a mortgage that's going to fit you best, rather than you going into, your bank and having to compromise by, the couple options that they have available for you. So how do you get pre-approved? So we're not really affected by the COVID that much in the terms of a pre-approval. They usually start with a text, an email. After this webinar, you're going to get an email from us that has a link to book an appointment with us. And it can be done completely over the phone. We can do it over text if you prefer, email, FaceTime. It says Skype, but more than likely we'll probably use Zoom. I don't know anyone who really uses Skype now. So it can happen completely virtually, and we actually don't have to meet or anything through the entire process. It can be done completely virtually, and all you'll need to bring to that meeting is going to be a pay stub, a photo ID, and then the rest, like documents, you can just email that to us, or even fax us if you need to send us some more of those documents later on in the process. So why would Canadians use brokers? So the biggest thing we can advocate is, to find mortgages that fit. So you can't really tell from myself or Joe's not here, but we're both quite tall guys. So the process of finding a t-shirt is actually quite a challenge. It can fit sometimes on the shoulders, but then you're swimming in it, or it fits well around the waist, but it's a crop top like the poor guy on the right image. So we really want to find mortgages that fit your exact needs so that you don't have to compromise in certain areas. So as I was saying, we give you access to way more products. You saw all the banks before and lenders that we work with that all have a very wide range of the products that they offer. We protect your credit score by doing only one credit check. So rather than getting individual checks at each lender, what we do is we just do one hard credit check, and that's valid with all of our banks and lenders that we currently work with. So you can find multiple products that are going to fit your goal and protect that credit score for you. And one that I really like on this list is going to be buyers having a unique story. So we really don't have, two mortgage applications that are the exact same. So the benefit of working with a broker is that we actually get to submit your application directly to the lender, and in that process, we can actually sort of advocate and give a background of who you are and what your credit looks like to help you get pre-approved faster. So just as a testimonial for this, earlier in the year, about February, prior to all the COVID stuff that's happened right now, we actually had a client come in, and in his past, a few years ago, he had poor credit, that, you know, he had some missed payments. And rather than submitting that to a bank where, you know, they could just decline him for having those missed payments and a little bit of spotty credit, we were able to find out that at that time he was actually only a seasonal temporary worker. And since then, he had acquired full-time permanent status at his job. So just after, you know, mentioning that in our submission for pre-approval, I think it was maybe a day later, he got fully pre-approved. So we really get to advocate on your behalf. We get to explain your scenario, and it's us actually dealing with the underwriters that we work with all the time. Oops, sorry. So using a broker is also completely free. So we don't get paid by you at any stage in the process. We actually get paid by the bank or lender that we get your mortgage funded through. So at no point in the process do you pay us any money. So it is always in our best interest to get you the mortgage you're looking for, as well as have it done as smoothly and as simply as we can possibly do it. So as I was saying, there's lots of mortgages that are available to you. So again, using all the lenders and really getting an idea of what your scenario looks like, we can find the correct mortgage that'll fit your needs. So if you're looking into a new build mortgage, we can do that. If you're looking to flip your home, portable mortgage, you know, cashback mortgages, anything like that, through just chatting with you and looking at your scenario, we can really find you the mortgage that's going to fit you the best. This is one of my favorite points about using a mortgage broker. So there was a study done, I think a couple years ago, that showed on average, Canadian brokers saved their clients an average of $42 per month compared to going to their institutional lender. So what that works out to about is a small Timmy's coffee every weekday of the month. It originally said every day of the month, but since the prices have gone up, we'll buy it for you Monday through Friday. So if you're like me, you love coffee, if you work with us, then you get to say that we bought you a coffee every single weekday of the month. So it seems like a win-win to me. So now that we've established the difference between, you know, using a bank versus a broker, we're going to look at some of the mistakes that we see people make in the office, you know, when they approach us to get their first mortgage. So number one is going to be ignoring your credit score. So it's always a good idea to find out where you stand in having your credit score checked. It helps you not to get stuck with a bad rate. So, you know, if you look at your credit score and it is pretty low, it gives you an indication of sort of where you're at. If you need to start, you know, working to get some more savings to increase that score, to pay off some loans. It really is kind of just a pulse check to see where you're at credit wise. It's super easy to check what your credit score is now. You can do it through Equifax, also, you know, sites like Credit Karma, or any mobile banking apps usually have that feature as well. I know CIBC does, as well as RBC. So it's always a good idea to see where you're at credit-wise. Also, if you have gone through a bankruptcy or a consumer proposal, we always want to advocate that you follow the 222 rule. So what this is if you have gone through a bankruptcy or consumer proposal, the banks are not going to actually lend you a mortgage until you have a minimum of 2 credit cards for 2 years with a $2,000 limit on those cards. So if you have been discharged and haven't done that, it's going to be the first step you're going to want to make moving forward. So this is just a quick breakdown of, you know, sort of the range of what your credit score can typically look like. So anything above 630 is considered a pretty good score. You know, you won't have that much issues. Anything in the 700s, you know, 690 and above, your very strong credit score. Anything lower than 630, we will probably have to work with you either to just find some strategies to start building that credit, maybe some things to pay off, or even if you're, you know, eager enough, we can go through a B lender to get that mortgage approved for a lower credit score as a minimum. And just a quick breakdown so you guys have a better understanding of, you know, what goes into actually calculating your credit score. You can see in the chart here that the biggest portion of what they look at to calculate it is going to be what your credit history is. So this is going to be the length that you've had those credit accounts. So if you guys have any, you know, old banking accounts from high school or from college that you don't really use that much, but you still have, it's always actually good to hold on to those to keep your credit score strong. Because the minute that, say, you close that account to open a new one, you lose all of the credit history that's attached to that one credit account. And you can see the second highest one is going to be debt owed. So there's always a good ratio to stick within when you're working with credit limits and what the current balances are. So how we like to kind of illustrate this is, does it look better to have a $900 balance on a $1,000 credit card or a $900 balance on a $10,000 credit card? The banks will look at those. You might be thinking it's $900, it'll be the same. It's actually quite different. They will look at having $900 balance on a $1,000 credit score much worse than the other option, because it's actually showing that you've used 90% of the credit that's available to you. So it's always a good idea to keep working within, around under 50% of your credit account balance, limit. That's actually going to give you a better score just working within that ratio. Mistake number 2 is not reviewing your options. So it's great to be doing research ahead of time, checking at Rates by Rate Hub. A lot of those things give you a good idea and some good information on what to expect in getting a mortgage. But there's many different rates, lenders, ways to pay, and penalty calculations. So don't get one track minded and stuck on this is the one way I have to do it. So just looking at rates, for example, 2.84 versus 2.99% as a rate. Is there a difference? So first of all, you'll probably notice that this is a older slide, as we're not seeing rates anywhere near 2.99, quite a bit lower now. But when you see it on paper, it doesn't really look like that much. But let's look at what that saves you over the life of your mortgage. So it's $1.40 a day, $42 a month, and over the life of your mortgage, 0.14% difference can actually save you close to $10,000. So rate option is always going to be a massive thing to look at when you're trying to find a mortgage that's going to fit you best. Different banks. So I showed you the slides earlier of the banks and lenders that we work with. There's more than 1,000 different mortgage options that are available to you. So by working with us, we will run your specific scenario by each of them, and it can actually result in tons of significant savings because we'll just do one credit check, and then we can base that against all of the lenders that we currently work with to find the one that'll fit you best. Payment options, monthly versus biweekly. Biweekly is always going to be your better option versus the traditional monthly payments. So as you can see in the chart here, the blue chart indicates a client paying off their loan on a traditional monthly, whereas the yellow chart is going to be at a biweekly frequency. So even just increasing the frequency to 26 payments over the course of the year versus 12, you're actually going to save a lot of money on interest. And the life of the loan could actually be shortened compared to what it would be on a traditional monthly basis. Penalty calculations. So this is actually one of the biggest things we can advocate of really reviewing the options that are available to you. So in any event where you're forced to break your mortgage, we know that life happens. Sometimes there's a separation, there's job loss that you have to move. Anything that is going to break your current mortgage and trigger a penalty payment, it's important to know what the penalty is going to be. So we can really use some lenders that have significantly lower penalty payments versus a lot of the institutional lenders. I know there was a story that's kind of been floating around where a customer with a TD mortgage broke their mortgage and ended up having to pay a penalty of $20,000. So you don't want to get stuck paying that just because life happens. So again, it's always a good thing to keep in mind. Mistake number 3 is borrowing too much. So we don't want you to overextend yourself, get into the most expensive house you can find, but then not actually have enough money to live while being in your new home. We want you to be able to order in from DoorDash, extend your Netflix subscription, whatever you guys are doing to stay sane during COVID. We want you to be able to live in the new house that you purchase. And on the topic of borrowing too much, when we can talk about borrowing before you buy, if you do plan on getting a car loan, we want to recommend that you wait and get a mortgage first, because we've seen that car loans with payments of $300 to $400 can actually pretty heavily affect what you could qualify for as a maximum like property value amount. And if you do already have a car loan, don't stress, don't worry about it. Reach out to Joe or myself, and we can really work with where you're at the scenario, find some ways around it to still qualify for the most you can. Mistake number 4 is forgetting about closing costs. This is a biggie because they are kind of this hidden fee that people don't really think about. There's a lot of things that go into it, and it kind of sneaks up on you. So in person, when we do these seminars, we have a lovely little laminated booklet that we hand out to everyone that they get to take home. Seeing as this is online, we are going to be emailing you guys the closing costs worksheet through the email follow-up from this meeting, and that'll kind of detail what to expect in terms of, you know, those kind of closing cost payments that you'll have to make. Mistake number 5 is simple enough of not getting pre-approved. So it's super simple. It's maybe a 5 to 30-minute conversation with me. You only need your ID and pay stub. It is completely free, guys, and it can help you win an offer. So it's a really great thing to take advantage of, and a great first step if you're not sure, you know, where to go after this webinar. Give us a call, reach out. We can do a pre-qualification or a pre-approval. After you know, you've chatted with us, you've been pre-approved, you really want to stress to set up your home buying team. Never rely on seller's agents. So again, working with a mortgage broker, working with a real estate buyer's agent, you know, Caleb, they're going to be great assets to have in finding the perfect home for you, because as your buyer's agent, they're going to be working with your best interest at heart. Don't rely and don't settle on, you know, using a seller's agent, because a lot of the times they're always going to have the seller's best interest at heart versus you. So we can really not stress enough to set up your home buying team. It'll pay off very, very highly through this entire process. So we're just going to quickly breeze through this second case study. So this was over in Tavistock, Ontario. So they had the property was valued at $329,000 when they bought it. Their down payment was $16,000, and their biweekly mortgage payments were $696. So what happened? Just after 5 years, the market value of this home actually increased to $419,000. They had $339,000 of mortgage at that time, so they could sell that home and take $140,000 to equity, in equity, to their next home in 5 years. So this is really just a testimonial of what a return real estate can have on your investment. Really, no other investment, TFSA, anything like that, after 5 years can give you $140,000 in equity. And of course, no other investments or savings, you can't live in any of those, whereas you can actually live in your home and have it be earning equity as time goes on. So now we're going to go into the best part, definitely my favorite part. It is how you guys get money. I love saving money and, you know, sharing those savings, grants, rebates. So there's the ticker. It is the best part. All right, so the first one I'm going to go through here is going to be the energy efficiency refund. So if you're a first-time home buyer, you are entitled to a refund of approximately $1,000 if you purchased an energy efficient home. So as an example, if your home costs $425,000, that refund will work out to be about $1,100 just from purchasing a energy efficient home. Ontario Land Transfer Tax and Toronto Land Transfer Tax rebate. So this is the big one, especially if you're a first-time home buyer. So the refund works out to be approximately $4,000 in Ontario. If you are planning on buying in Toronto, not sure that anyone here is, but if you are, they will kick in an additional $3,700 to that refund. So the total rebate, if you're a first-time home buyer buying in Toronto, would be $7,700. New to Canada benefits. So this is a really cool initiative to help some newcomers to Canada get into their first mortgage. So what this is they've actually reduced the employment requirements from a minimum of 3 years to just 3 months, as well as there's no credit score that is required. They will just need to see what your bank statements, insurance statements, phone bills, they'll look at it that way. So this is a really cool initiative to help if you are a newcomer to Canada, you know, get over some of those hurdles that can sometimes be really tough to, you know, get over to actually get into your first home. This is a great rebate available if you are looking at building a new home yourself or buying from a builder. So if you're a first-time home buyer, there's an HST rebate that is available to you. So buying a new build home or building one yourself, it'll have a HST payment on it as well. So if you are a first-time home buyer and the new build is going to cost roughly $425,000, then roughly that rebate works out to be about $33,000 back into your pocket. Tax credit that's available. So if you're a first-time home buyer, on your income tax form, there's a credit of up to $5,000 that you can fill out. So just as an example, if your family household income was $85,000, that works out to be about $2,100 back in your pocket. That is a super simple one. It is literally on your income tax, just filling out on one of the lines, $5,000 tax credit, and that is completely there for you to apply for. So free 1-year home warranty that's available to first-time home buyers. So a lot of the lenders that we work with will offer you 1 year free of home warranty against home heating, air conditioning, electrical, water heater, and plumbing. Guys, Murphy's Law, if anything's going to happen in your home, it'll happen within the first year of buying it, right after you've paid out your down payment, you've paid for all the closing costs, something's more than likely going to go wrong. So it covers up to $10,000 in repairs, and there's no inspection required to take advantage of that. If you're having trouble finding your down payment, you can withdraw from your RRSP completely tax-free. So they've increased it from $25,000 to $35,000 that you can withdraw up to, or $70,000 per couple, completely tax-free. So that can save you $21,000 just in tax. So for this one, again, to apply, you only need to be a first-time home buyer. If you are someone with a disability or buying a home for someone with a disability, you qualify. And if you just haven't owned any property in the last 4 full calendar years, then this is applicable to you as well. How to get a down payment even if you don't already have one. So time and time again, we see clients come in that, they have great credit scores, they have great income, they just don't have the savings to get over the hump of getting a down payment. So what is available in the Simcoe County area and all of these municipalities listed here is going to be a municipal housing grant. Some of them have different names: affordable housing, municipal grant, there's a lot of different names for them. But what they all are is they work as a forgivable shared equity loan on your house. Some of them work at 5%, some of them work at 10%. But the benefit of using these is that they will give you an extra 5 to 10% down on a shared equity loan, but it is completely forgivable. So if you purchase a home and live in it for a minimum of 20 years, then that loan is completely forgiven. You don't have to pay anything back to them. There is a bit of a wait list for this. Generally, you sign up and it takes about 6 months to 12 months to get funding. So this is a great grant to take advantage of if your timeline works out to wait to get funding for that down payment, 6 to 12 months down the road. Other ways of accessing a down payment are going to be through a line of credit. There are rent-to-own programs that are available to you, gifted equity from seller, any money from family in the form of a gift or a personal loan, and of course, cashback mortgages are something you can take advantage of as well to help offset the payment. So in total, looking back at everything we've saved, I don't expect you to remember all of the facts and figures that I just threw at you. I went through them pretty quickly, about 15 minutes or so. The point is that in total, all of these savings, if you were to stack them on top of each other, could be up to $52,000. So the main point is that we know what all of these incentives are. We can help you navigate which ones you qualify for and which ones you maybe don't. And the benefit is that these are all readily available. Almost all of them are for first-time home buyers, and a lot of people don't even know about them. So working with somebody such as myself, Joe, even Caleb, we can really help push you in the right direction and get you the information you need that's going to give you the most savings while applying for your mortgage. So as I'm wrapping up, I will just cover what the first-time homebuyer incentive is. So this incentive enables first-time homebuyers to reduce their monthly or biweekly mortgage payments without increasing their down payment. So the incentive doesn't bear interest and it doesn't require ongoing payments. It actually goes on as a second mortgage on the mortgage that you apply for. So through through the incentive, the government of Canada is going to offer you 5% if it is a resale home, or they'll offer you 5 or 10% if it is the purchase of a new construction home. So let's just look at what the scenario looks like. You know, the left-right column of someone who bought a house without the incentive and someone who did. So as you can see in the first few rows, the values are all the same. So both buyers had the same income of 100,000. The home price was the same at 421. Down payment was the same. The only difference you'll notice here is on the right, there is an additional 5% down through the first-time home buying incentive. So what that did was it lowered the insured mortgage to 378. The insurance premium was down by close to $5,000. And what that affected them in the monthly mortgage payments was it saves them $123 a month, or in yearly mortgage costs can save you $1,400. So it's a great way to, again, not make any payments during the life of the incentive, and really be saving, each year on your mortgage just by having lessened monthly payments. So $1,400 every year, that's enough to buy a hot tub, get a jet ski, something exciting, something that is life-giving for you, or even just to put into a savings account for future purchases down the road. So what properties are eligible? So any new construction, resale homes, semi-detached, duplex, triplex, fourplex. It is a long list. Basically, if Caleb can find you the property, it is more than likely eligible for the first-time home buying incentive. Who can apply? So to apply for this one, you do have to be a Canadian citizen or a permanent resident. You can be a non-permanent resident who is legally authorized to work in Canada as well. A couple of the guidelines they have is that the maximum qualifying income for your household cannot exceed $120,000, as well as the maximum mortgage amount you can borrow is limited to 4 times whatever your household income is. So for an example, if your family household income was $100,000, the maximum mortgage amount that you could apply for would be $400,000. And again, at least one of the home buyers must be a first-time home buyer. So that is the end of my presentation. We do love to offer everyone, on top of getting this, completely free informational, educational presentation, we do want to offer you guys a chance to win your down payment. So as a thank you, it's already in the chat box now. There's a quick little jot form link. I will repost it so that you can click it and fill it out. We only need your name and home address, and we will send you a quick thank you card as well as a scratch ticket where some of the prizes can be up to $10,000. So we would love at the end of this to hear that you got a ton of information on how the process works. You've been connected with a mortgage agent as well as a real estate agent, and then on top of that, you fully win your down payment just by filling out a form, scratching 3 boxes, and winning $10,000. So thank you guys so much for being patient, for listening to all the numbers that I was throwing at you. I hope a lot of it stuck. If not, go ahead and write in the chat box any questions that you guys had. And then when we round off the presentations, I will go through anything that I missed or anything you want extra clarification on. You can call and text the office at either of the numbers there, or visit us at mortgageweb.ca/barrymortgagebroker, or even facebook.ca/bmortgagefree. Thank you guys so much. I know that was a lot. That is the end of my presentation. I will kick it over to Caleb, who's going to talk about the exciting side. I deal with a lot of the boring numbers. Again, Caleb deals with a lot of the fun, excitement, shopping for a home. Yeah, so go ahead, Caleb, whenever you're ready.
Thanks, Sam. Appreciate that. Yeah, your side is pretty boring now that you say it like that. I'm kidding. Of course, the fun part of the process is going through houses, but can't stress enough, and you'll see in my presentation too, for the people watching today, is it doesn't make any sense to see a house unless you have that license to shop, that golden ticket, which is first speaking with yourself and having a pre-approval. And like you said, a lot of millennials are on the hunt for their first mortgage, and we like to text, and we can text you and get the process done that way. At least it allows us to start looking at places. And then in terms of conditions of the mortgage or conditions of the commitment and just appeasing the paperwork side of things, then it's back to the boring stuff. So I'm going to open my presentation here, and I'll get into it, and I'll try and be quick and not cover the same topic twice, and we can get into a Q&A and answer any questions. So as Sam said, my name's Caleb. We're going to talk a little bit about myself personally and professionally, what the buying process looks like. Being a full-time real estate agent, working with first-timers all the time, what sort of advice would I give to you as a first-timer? What are the costs involved in buying? We did speak about that a little bit. And options for representation is just going to talk about how you can buy a house and who can be on your side, and if there are fees associated with that, what that looks like. Some common fallacies, so pitfalls, mistakes, if you will. And then I just want to draw a little comparison between looking for a house in the country versus in the city. So professionally, I'm a real estate agent. I haven't been a real estate agent full-time for too long. I'm in my 5th year, but I've loved every minute of it. I have spent my entire life in sales, though. Since I was 18 years old, I've been working full-time in a sales environment. And so through all those years, I've learned that service is really what sales is all about. It's giving before you take and serving before you sell. So I like real estate because you're not selling anything. That's on you to determine whether or not you like a house, and that's on me to open the door. So it makes it a very easy relationship to cultivate, and the realtor really gets all the glory while there's a lot of people working in the back end, like lawyers and lenders and insurance brokers. And so in those few years, I've been able to sell 270 homes independently, and blessed for the business, but that volume has allowed me to see a few different scenarios. And so you can feel comfortable if you were to work with someone like myself, that whether it's a middle unit townhome in the city, or it's a condominium, it's an apartment, it's a mobile home with a land lease, or it's something out in the country on well and septic, high likelihood I've seen it many times. And just having that knowledge is going to be paramount. And a few of the accolades, I've been named Canada's top 35 under 35 2 years in a row now. And the second publication will be released this September. So I'm very happy to have received that award again. And that's an age category restricting agents under 35. In all age categories, I've landed in the top 200 agents in the country for every year I've been in real estate. I made a couple of small, short-lived 15 seconds of fame appearances on HGTV. I filmed a few episodes with Scott McGilvery when we crossed paths a few years ago, and we did some Aurelia and some Barrie business together, which was awesome. Great experience. But my main focus, where I live and I work and I serve, is in Aurelia, Ontario, and your surrounding outskirts, townships like Ramera, Severn, or Oro. So what does the buying process look like? We've said it 600 times, and it's because it's the most important. You can't, if you look at a house and you like it and you can't get approved for it, it's going to be disappointing. And you don't want to the buying process should be fun. It's quite invasive and it's a lengthy process sometimes. And we get it as a first timer. You're going through a lot, you're jumping through hoops. And because it's your first time, it's not going to feel comfortable yet acquiring paperwork and going through all these different things. The last thing you want is to find out you can't afford a home that you liked, or more specifically in a location or neighborhood, and that specific house is gone. If you like the house, chances are there's other people that like it too. So if you're going to be in a situation where you need to act quick or compete, you don't want to have to then just be starting your pre-approval process. So it's not always a quick one, once and done with the pre-approval process. Sam may have recommendations for you on how to repair your credit, or, the process, as he mentioned before, of getting an assisted down payment through a grant program can be 6 to 12 months. finding a place and writing an offer is not the time to start that. So number one, before you see me, you do need to pair up with a mortgage broker like Sam or Joe and get that pre-approval in place. Once you have that number, we can build a behind the scenes auto search. And this is an automated email program that allows you to see listings just like I would as a realtor. So all the available photos, the property taxes, the inclusions, the exclusions, the days on market, the local schools, basically the non-public version that you get on realtor.ca. So you'll see what I see as an agent, and it'll land in your inbox instantaneously. The second a listing goes on the market, it's in your inbox. Whereas realtor.ca, it is fast, faster than normal, or than it was a few years ago, but it is about a 4-hour upload. So you'd be seeing these homes 4 hours in advance of the public, and that's assuming the public was sitting on realtor.ca, hitting refresh and waiting for it to come up. So you want that search to be proactive. You set up that criteria, and the most important part of that criteria is purchase price range. If something lands in your inbox and you're like, this is it, then we go see it. Now we get some marketplace experience. And don't be discouraged if you like the first house you see. In a digital age, we have videos, we have tons of photos. You've probably been through lots of houses before, maybe open houses. It doesn't take much to let you know whether or not you're going to like something. And most often, when you're finding a house online, it really is, as long as it looks as good in person as it does online, I'm going to make an offer on this. So I know some people say, well, we can't ever make an offer on the first house we see because it's just the first house. Don't be discouraged if you find the one right up front. And then obviously the next step is, once you do find a house, whether it's your first showing or it's your 71st showing, and it shouldn't be, but at that point you're going to write an offer, and you need to be paired with an agent who is skilled in presenting offers, because you, in a market that's running as smoothly and as hot as today, you may not be the only person looking to make a purchase. And so there are more components to an offer than just price that will make it attractive to a seller. And again, happy to discuss that in the Q&A. And then the wrap up and the closing, they're one and the same. Essentially, once you've got an accepted offer on a place, you run through your conditional period if you did have conditions, and then you're going to be paired up with finding a lawyer that can close the transaction for you, and we can talk about those fees associated with it, and getting insurance and transferring utilities, and like Sam said, the boring stuff. So here's a couple of tips. Tip number one is to pay your property taxes directly to the township or the city in which you buy your house, versus having it tagged onto your mortgage. From a convenience standpoint, having one payment is nice, but from a logistical standpoint, it actually makes more sense to manage this yourself. There's the short and quick answer to this is the mortgage company is going to hold an account on the side for you that needs to be pre-funded for when the city goes to them for an automatic withdrawal of property taxes. Well, while it is convenient and out of sight, out of mind, to pre-fund an account normally means they're going to hold more in there than what's actually required, so that regardless, there's never a shortage. So that's just extra money lying in an account that you could have in your bank account. We're not talking a ton of money, but it is just a small tip that I do instruct first timers or any timers to, when they're buying a house, to pay directly to the township or the city. The alternative to that is, if there's not enough money in that pre-funded account, then they're going to lend the difference to the city, and then they're going to charge you interest on the balance the next time they collect it. So it's just easier to pay your mortgage to the mortgage company and your taxes to the treasurer of the city or the township. Hiring a buyer's agent. This is one that people often don't think about, and it's not in a bad way, it's just not top of mind. So let's just say you were looking for a home. Normally what you do is you go on realtor.ca and you find a house you like, and you call that agent and you arrange a showing with that agent. Well, that agent is already under contract with the seller. That's the listing agent. So their best interest is going to be first and foremost to the seller. So although they do want to sell you the house and they want to get both ends of the deal, the purchase end and the selling end, the list end, they're not always going to have your best interest in mind, which could be negotiating a lower price. And remember, the lower they sell the house for, the less commission or fee that they make too. So they're really going to want to protect the seller's interest. even if they tell you otherwise. It can be done. It's a fine art to represent both ends, but it's often most comfortable when you have an agent in your court that you know, like, and trust, that is working with the mortgage broker that you've chosen. And you can go to town. You only have to tell your story once, and you can say, hey, Caleb, here's 3 houses I want to see after work today, instead of arranging the showings yourself with 3 different agents and having to go through questionnaires and things like that. So it's just nice to have somebody in your court that is going to go to bat and has the wherewithal to get you a fantastic deal. And to clarify what a fantastic deal is, it doesn't always mean the most amount of money off of a house, because often homes are priced at market value, and that's the listing agent's job, is to make sure that it's priced accurately to generate the most amount of showings as possible. So more often than not, the buyer's agent goal is to get you the house, not necessarily the most amount of money off. And buying a house at market value is a deal in itself, because it can be one heck of an investment if the market inflates and you're making tax-free dollars without having to do anything. Qualifying for land transfer tax. Sorry, my screen is in the way here. I'm just going to move that over. So the rebate here, if you do have a co-signer and you arrange with the lawyers, you can have a different percentage ownership. So say it is your mom or your dad that signs on the house with you to help qualify for the mortgage. Well, they can be a 1% owner. You can be 99% owner. And although your parents do not qualify for the rebate because they're not first timers, that's only going to be 1% of the deal, and you'll get the rest of the rebate. Did I say that right, Sam? Yeah, it's not 50-50, right? It's the percentage ownership, right? And then another tip is if you've been pre-approved and you found a house and it's closing in 90 days, do not apply for credit in that 90 days, please. Do not get a car, especially. So as Sam said before, a $300 monthly payment could so $3,600 a year times 25 years, that's $90,000. That could be wrong, but that's quick math. So that's, now you're taking yourself from say qualifying for a $400,000 home down to $310 because you've bought a car in the meantime. And if you got a $300 a month car payment, you've done actually well, because now with prices the way they are, it's going to be more than that. So get your house, close on your house, have the lawyer transfer the funds, get the key to the front door, go buy whatever you want after that, as long as you can afford it. And then using multiple search tools is a key thing here, because as a member of our local board, we can only see inventory that local realtors list. So if you have a Toronto agent that drives 2 hours north to list their family's cottage, and that's something you're in the market for, let's say, it might be a 4-season home on a river up in Washago, north of Aurelia, you're not going to see it on my search. It doesn't really disadvantage us. It just means that we have to both be using realtor.ca paired with my search tool. You can go on Kijiji, you can go on Facebook. There's lots of different ways to find inventory if you're finding it difficult. 95% of the homes you find will come from the automatic email search that your agent sets up for you. All right, on to the next one. So what does it cost to buy a house? So of course you have your down payment. Let's call it 5%, and let's use a $400,000 purchase price as an example. So that's $20,000. Then you're going to have closing costs, which make up of legal fees. You might have a home inspection. You might have a possible appraisal cost. Sometimes the banks cover the appraisal. I don't know that world as well, but have a few dollars in the bank. So an appraisal can be $400 plus HST, and they won't actually schedule the appointment until you've paid it. So rather than being surprised, just bank on it in advance that you may have to pay for that. And if you don't, then you're up $400 plus HST. A home inspection is going to be around $500, so similar cost, $450 plus HST for a home inspection. And the rest of the things, like maybe doing a water test if the house is on well, is free, and that's something that I do as well. And so aside from the down payment, you'll have the legal fees as well, which they average about $2,000 for a purchase, $2,100 for a purchase. And I just pulled those stats recently from a local lawyer here in Aurelia. From January 1st to today, what his average purchase close was to the buyer. On the selling end, it is cheaper because there's no title search and there's less disbursements. But yes, so put aside about 1% of your purchase price in addition to your down payment. So on a $400,000 house, you have a $20,000 down payment, and then you also have $4,000 to disperse between inspections, appraisals, and closing costs. And you know, in some cases, you might get caught where the seller has prepaid the property taxes for the year, and if you close in February, you're going to have 10 months of property taxes to pay for up front. The city's not going to give you a rebate. You have to reimburse the seller. And so just have that 1%, give or take, in cash if you can. You do have to make a deposit with an offer. And a deposit and a down payment are two different things. But the deposit comes off of your down payment when you close and you go see the lawyer. So if you buy a house and you make your offer with a $5,000 deposit, upon acceptance, you would give a $5,000 check to the listing brokerage of that property. And again, your agent will walk you through all of that, and a good agent will even deliver your deposit for you. Just saying. And that $5,000 will come off your down payment at the end of it. So instead of bringing $20,000 to the lawyer on closing, you'll be bringing $15,000. So it's not lost money. It's just your financial consideration in the deal, since you don't have physical collateral to offer, which the seller does, and that's the actual house. Okay. Options for representation. I mean, I'd rather answer some of these in Q&A. It's not really something we have to spend too much time on, but hire a buyer's agent. Sit down with somebody, interview them, interview a few people, find a fit, find somebody that's going to work for you while you're at work, that's going to be finding inventory, that communicates well, that picks up their cell phone when you call them, that maybe your preferred communication method is text. The nature of your job makes it easier for you to send a quick text. You can't hop on a phone all the time, or maybe you like email. So find somebody who speaks your language basically and understands your preferred communication method and is comfortable with that, and that is available. And so my recommendations there are, if you're looking for a realtor, you should find somebody who's full-time, because 9 times out of 10, the houses you're looking at, they may have already been through if they serve that local area and they're active agents. They're going to be able to bring you a lot of insight and save you time from going through properties that aren't good fits. So the other options are to go directly through the selling agent. We talked about that.
It was on before.
Not advantageous there.
Of course, we can't get
And
it
then the
back.
last one is representing yourself, which is just going through lawyers, and that's just a recipe for trouble. So we're not going to talk about that. Since it's free to use a buyer's agent, why wouldn't you? So
No time information.
I'm getting a little bit of feedback in my speaker. Can you guys hear me okay?
Connected with that darn thing up there.
Just going to, okay, that's better. So yes, I hear often, if I buy the house with the agent who's selling the house, I'll get a better deal. Well, I mentioned a million times it's free. So you're not paying a buyer's agent, so there's no deal to be had. The seller would be the only one that would benefit from that if the seller is, if the agent and the seller work out a deal where they would lower the commission because they're getting both ends. But that's a savings to the seller. It doesn't necessarily mean they're going to pass that on to you and lower the price of the house below market value just because the agent is willing to toss in a few dollars. So it's extremely rare that savings gets passed on to you. An agent is going to want to protect their income more than they would to lower the price of the house. So just using a buyer's agent is really not disadvantageous in any capacity. It's just an age-old thing that people are thinking. Like when our parents bought houses, maybe it was a thing, but today, at least in the last 5 years in real estate, it's just it's a fallacy. The number one problem I have with first-time home buyers is influence from a third party, whether it's a friend or a family member. Their friends and families that haven't bought houses recently are saying, oh, when I bought my house, I was able to go in 25,000 under and they took it. Every situation is different. Every market is different. And so if you haven't bought or sold in today's market, taking advice from somebody who hasn't bought and sold in a long time can really screw you up. And so it's important, if you find an agent, that you trust them as much as a family member. This happens more than I'd like to admit, but people often say, oh, my parents said, because they have some influence, they're lending us the down payment. And so they've said, hey, this is how I would tackle this. Find out what the market average is for list to sale ratios. What are homes selling for on average in relation to what their asking price is? And that percentage is going to help steer you in the right direction. Sit down and have a look at what homes in that neighborhood have sold for recently. And that will tell you if the house you're looking at is market value or not. Don't just assume because it's a list price and you see something wrong with the house that you can automatically start offering lower. You will lose the house, or you'll insult the seller if you go in too low without a strategy. Make a strategy before you make your offer and then go from there. If you're the only offer, there might be room to negotiate. If you're competing against other offers, you don't have that second chance. And so your highest and best is the best strategy at that point. And that's where the advantage of working with a realtor that can tell you what the market value is of the property, because then you'll feel comfortable whether you're going in at a good price or whether you're paying way too much for the house. You'll know if you've paid too much for the house because by the time you get to Sam and the paperwork comes through and he orders an appraisal for it and the appraisal comes back lower than what you've paid, it'll be a telltale sign that you've paid too much, and you might be on the hook if you still want the house to pay the difference between what the appraisal came in at and what your offer price was so that the ratios remain in line. And as a first timer, you may not have that extra cash. So be strategic with your offer and mute out the exterior influences of people that are just trying to help you, but don't actually have the experience to do so. And then the last one is, I'm going to wait for the market to crash. If I had a nickel for every time I heard that now, I would be retired. Because of coronavirus, people assume that house prices are going to go way down. And that's just an assumption. They're simply assuming. It could be true, but it could not as well. We don't know that. We can only speculate. But what I can tell you is today the market is very healthy. And at the rate of inflation that some analysts are saying, it would be impossible for most Canadians to outsave a down payment versus their house going up in value. So maybe you get into a house that's not exactly what you're looking for right now, but in a year or two, you can sell that, be sitting on a massive pocket of equity and use that, translate that into a home that suits your needs a little bit better. And so, yes, it's different than when they had to do it 40 years ago and you could just buy your forever home up front. Today, we have to do a little bit of creative financing, house hacking, whatever you want to call it. So my advice is now is the best time to buy. I don't mean specifically now, I mean as soon as you can. So if you're ready in 6 months and you have a down payment, don't try and save more. Get into the market and let your house do the saving for you. Okay, I think this is my final slide. Yeah, well and septic versus city services. Banks can be picky depending on the lender Sam chooses for you. They may want to see you in a city home versus a home that has a 45-year-old septic system and draws from a dug well for the water source. So we can talk about that more in the Q&A, or if we get paired up together, I'd be happy to explain that more in depth. If you work from home, some millennials do, and finding a house with good cell service is paramount. Because if you get stuck in the city because you want, or country because you wanted space, but you're on satellite internet, it can be spotty. And the first storm, you've lost an entire workday, and that's not fun either. And then the maintenance of owning a property in the country versus the city can be drastically different. So it's not just what's my mortgage; it's what's it going to cost me to run this house, like utilities. Country hydro is much more money than hydro in the city because of the delivery charge and the distance. They're going to charge you much more. And so if you look at average utility costs before you buy a house, that'll give you an idea. Can I afford to run this place? If you're on oil and / electric heat, and it's going to cost you $700 a month in the winter to heat versus $120 on natural gas in the city, that could be a big consideration when buying a house as well. So don't just shop because of the price, shop for what you need as well and for the amenities that your house offers you. So that's everything. That's my presentation. Hopefully I didn't lose you there, and I look forward to answering any questions that you may have. Thanks, Sam. Appreciate it.
Awesome. Thank you so much, Cale. That was good. I like
pleasure.
that you've highlighted that not to trust, not to not trust, but to listen more to current market agents versus family, because like you're saying, timing and markets are very different and can have very different results. So it's always great to chat to someone who's currently doing it.
Totally.
Alrighty, yeah. So if you have any questions, please send them in. I know we have a couple in my chat at the moment we can go through, but don't leave without asking a question. It helps, the process helps us explain better. It helps you understand more. Yeah, so there's one here from Zachary. So I've been receiving WSIB benefits since July 27th, 2019. Have you ever dealt with a mortgage approval with someone who's receiving full benefits like that? So personally, I haven't. I'm sure that Joe has definitely worked with a case like this before. I know that in terms of, sort of non-traditional income, if you are still getting, that payment on a average basis, it does depend on the lender. There's some lenders that will use, those kind of monthly fixed payments as an income, and some that don't. In terms of WSIB, I'm not entirely confident on that, but I do know that Joe, in his 10 years of doing this, he definitely has come across that before, because I know that certain sources like EI, they won't accept that. So definitely reach out to the office. I can even get in touch with you after this, and we can chat over what your scenario looks like, and yeah, to start the conversation from there. I also do have a second question here from Shubhit. It is, hi, I'm on a work permit in Canada. Am I eligible to buy a house in Barrie? So it is kind of confusing, because the first time home buying incentive is, you qualify for it if you are on a work permit, but you cannot actually get a mortgage in Canada unless you are a permanent resident. So you would have to secure permanent residency before purchasing a home. I have also had a couple questions about receiving the slides. So after this webinar, you guys are all going to receive an email that has some of the links for the documents we've been chatting about. We'll also put in an audio link as well as a video of the presentation, so that if you joined late, I know that some of us are still adjusting to Zoom and getting our internets to cooperate with us. So we'll have a full video presentation as well that you can listen back on. Okay, another question here from John. So does the term of the loan, example, open versus closed term, depend on the size of the down payment? It does not. So most of the mortgages that we'll deal with will all be closed mortgages. It's not dependent on the size of the down payment. It is just a different mortgage term, closed versus open. Generally, they're all going to be closed terms. Another question here from Janish. So how long shall I have to be working with my employer? Can I change job after you get pre-approved? So they will look at what your current qualifying income is. That will be the biggest factor in getting your mortgages. But lenders are actually starting to ask for previous employers as well as what the income was with those employers. So they are factoring in what you did make in the past. But in terms of qualifying for the mortgage, it will be whatever your current stated income is with your current employer. And they do need at least a minimum of 3 years experience in that current, just in job experience. So it's always good to have that information handy, so that when we do, complete the pre-approval, you have the appropriate amount of work history so that we can get you approved pretty quickly. It's a good question, though. Another question here from Courtney. So does it help to be married when getting your pre-approval? I'm getting married in September. Should we wait to apply for pre-approval? So you don't have to be. I guess it depends on whatever your status is at the moment. We've submitted ones that are technically under common law. So if it is in September, how far in advance did you get in a pre-approval looking to buy April, May? Okay, so if you are looking to buy in April or May of next year, then it's definitely easy to reach out to us now and start what's called a pre-qualification, where we'll look at where your assets are at, where your liabilities are at, get an idea of what you're sort of working with credit-wise, as well as what you'll qualify for in a maximum mortgage. And then from there, we can work towards doing a pre-approval, so that if there's credit that you need to work on to build that, if there's debt that you need to pay off first, it gives us some time to work with that. And then we actually already have all of your information on file that we can just make a few tweaks and fully submit your pre-approval. So that's a good question. So again, the rate hold is 120 days, though it is pretty easy to extend your pre-approval as well. Should you not find the house that you're looking for in that time of being pre-approved. Good questions, guys. Keep them coming. You can also unmute yourself if you prefer to have a chat with Caleb or myself. We're here, ready to answer anything. A secondary question here from Courtney. So does it hurt your credit to get pre-approval or pre-approved several times? So each time if you do get a new pre-approval, we will have to pull credit if, say, one pre-approval expires and we have to extend it or anything like that. We will have to do a credit check each time we want to resubmit for a pre-approval. So it would be impacted, if we have to pull credit every single time for your pre-approval. I hope that answers what you were asking. Okay, so I have a secondary question here from Zachary Martin. So can you explain the benefits of higher % down payments for first-time home buyers up to 20%? So the more you can put down, the less the mortgage loan actually is. So the more that's down lowers the insured mortgage amount, which saves you on insurance premiums that you'll pay, because anything under 20% is going to trigger mortgage insurance premium that you'll make. It'll be added to your monthly or biweekly payments. So the higher that you have down, it lowers that mortgage value and saves you money on the mortgage insurance that you'll be paying each month, or if you choose biweekly. Alrighty. Great questions, everybody. I just do want to remind everyone one more time, if you haven't filled out the JOT form to receive your scratch ticket, please do so before you leave. It's a great opportunity to win your down payment. As well, if you reach out to either myself or Joe or Caleb, if you have questions, if you have to go and you weren't able to ask your question before you were busy doing something else, say go back to work, please reach out to us or get in touch with us somehow, and we'd love to chat with you and continue the conversation to get you into a home.
All right. Thanks, Sam.
Alrighty.
Thanks, everybody.
Thanks a lot, Caleb, for your time, and yeah, thanks everyone for carving out an hour or so on your Wednesday afternoon. Alrighty, we'll see you later, guys.